Well, hey there, everybody. This is Jason Stapleton, and I am on the road this week. And I had considered not doing anything this week because we've got Thanksgiving coming up, but I realize also that I haven't really done a Forex market preview in about 2 weeks. This would be the third week, and I thought, well, I really can't do that. But we're on the road, and I got to tell you, when I leave the office, when I walk out, I'm gone, and I don't really think about it. I try not to take work with me when I'm away with family, and that's a good thing for everybody to keep in mind. But my job is the markets and kind of working with you all to try and help you all overcome some of those hurdles that new traders or unsuccessful traders are facing. And so when I leave for the weekend or when I leave for vacation time, I try not to let that interfere. However, I wanted to get something out to you because it's been about 3 weeks. So I thought I'd just do some basic training on structure today. And some of you guys have had this before, but it's always good to have a little review lesson about basic tenets of structure. And then also what I want to do is we've got some software, and they've got it. We've got a thing going on just this weekend. It's good till Monday, so I wanted to at least show you because it's based off of structure, and there's some software that's normally about $1,000 that is discounted by about $800. So I wanted to at least show that to you and show you how structure works, and then I'll show you the little deal on the little software piece that we've got for MetaTrader and for NinjaTrader. But when we start thinking about structure, and this is going to make this a very quick video, there are certain levels in the market. Now, if you remember to some of the basic training that I do on structure analysis, on technical trading, the chart is the visual representation of all market participants' actions. So we're getting to see in the chart what happened, the decisions that people are making, and the result of those decisions. We don't necessarily get to see the individual decisions, but we get to see the result of the collective decision making of all of those market participants. And that's incredibly valuable and incredibly beneficial to us because what it keys us into is what the market is likely to do. Where did traders come in and start selling? Where did they come in and start buying? Where did they have trouble getting over those humps? And so what I want to do is you can take this with basically any chart. And depending on how structural the market is working at the time, how trending it is, you're going to get varying degrees of success with the structure stuff. But I want to show you just how powerful this structure can be. So if we take a look at just some basic structure levels, you can see that there was an initial high that was put in right here. And then this market had kind of a retrace, and then we rallied back up, and as we came up into that same structure level, what we notice is the market found some resistance again. And it had a little bit of trouble getting over that area. In fact, it got beat down just a little bit. And it had to retrace into, and I won't get into Fibonacci levels or anything like that, but we retraced into about a 382 retracement. So if I kind of grab this, and I haven't done any of this Fibonacci work prior to this, I just kind of looked for an area for structure. So we'll see how well these fibs play out. So it's about a 50%, a little bit deeper than a 382. Came down into about a 50% retracement. Not into the 618, which would be a key level we would want to monitor, but the 382 is an important level as well. So as we see that market retrace, the next thing that happens is we see a rally, and we get what I call a break above, close above. So what that means, guys, is that the market broke above the previous highest high and it closed above that. And that actual break of structure happened right here, a break above, close above. Then we traded sideways, had a little pop, and then we get this little retracement. Okay? Then the market kind of rallies again, and you can almost consider this just to be a bit of a sideways action that happens here. Oh, sorry about that. Get rid of that. Then the market rallies up, and then we get a retracement. Now, ladies and gentlemen, this is what's important, is that we always want to, I say, look left, structure leaves clues. Well, what happens when we look left? Well, as we look left over here, we see previous structure resistance potentially becomes support. And then we see the market rally up from that level, from that previous resistance level. It does prove to be support, and we rally back up. Where do we go? Look left again, structure leaves clues. Now this might have been a key structure level as well, but the market didn't really stop there. We rallied up to the previous structure high, and then we retraced. The market tested again. We got a double top against that RSI level, and then the market broke down, and we get a break below, close below the previous structure level. Then the market rallies up, and where do we rally back up into? Look left. Structure leaves clues. Right back into that previous support level. So as this advance is broken, we get a little structure level, and then we come back down in. We rally back up again. We don't violate the highs. There isn't a break above, close above here. And then the market puts in a new structure low, a lower low, lower close. Now, guys, if you need to watch this, I have several trainings on this. So I'm kind of bringing you back into this. Go to the YouTube page, watch it on the YouTube page. There's a massive amount of training on this. But this break below, close below, as you can see, we both broke below and closed below the previous low. And then something interesting happens here, okay? The interesting thing that happens is we actually go the other direction. So we just had a break below, close below, and we were expecting the market to continue in trend, right? Because the market signaled it wants to go lower. But then all of a sudden, out of nowhere, boom, we get this big pop. And we actually break above and close above the previous highs here. Now that in your mind should instantly shift. It should cause a mental shift in your mind that says, whoa, 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 something odd just happened. We were bearish. The market was making new structure lows, lower low, lower closes, and then all of a sudden out of nowhere we get this rally and we break above and we close above the previous structure level. Alarm bells should be going off in your head saying, well, whoa, this is not normal. This is not how the market should be acting if we're going to be going lower. And for us, it shifts our thought process, and we now say, well, the market's no longer bearish, we're now bullish. And I now need to be looking for a bullish area where I could look to get long. And I look left, so I come down here. Where's the most previous structure resistance level? It's right there. And where do we go? We pull back. Previous structure resistance becomes support. And wouldn't you know it, boom, we get a nice upward move. Now I could get into a whole lot more here, so because there's a whole lot more that happened right here than just previous structure support resistance becomes support. I can add in some things. So I can grab my Fibonacci tool and I can say swing low to swing high from this level, and what I find is a 382 retracement. I can then bring in my Fibonacci extension tool because I know if we hit a 382 retracement, we're likely going to roughly a 127 extension. And I can see this is going to come in at about a 127, right in there, 127.1414. And then if you guys didn't notice already, this is actually an AB equals CD move, where this leg of the move with the retracement is equal to this distance. So that's what we would consider a harmonic move or an ABCD move. So with that, we can make some predictions about where markets are likely to terminate. So we can do some things like, for example, taking a look at this, if we pull this down to where it needs to be, let me just delete this and let me copy this leg of the move. So I'm going to go ahead and just clone this leg here, and I'm going to drag it up like this. See how neat that is? We can say AB, So now we have this break of structure. We've got a pullback into previous structure support, which should be, or resistance, which should become support, which it is. So we can be a buyer here at this previous structure level, knowing that the market has shifted in trend, and we can look for a rally. And if we're looking for places to take our profits off at, well, now we can look at, well, where's that harmonic move come in at? Well, it comes in at that 1414 level, right around 139.15. That's a great place to look for me to be taking my profits off. I can also be saying to myself, well, if the market comes up into that 1414, I have an ABCD move up into a 1414. Let's look left and see if there's any structure back there. So now I can go ahead and take my horizontal line tool and I can drop that sucker in there. And then I can just kind of look back and see, well, do we have any structure level there at all? Is there anything there? Well, not a lot. We've got just a little bit, an initial test way back here that showed some signs of structure. So we don't have a lot of structure at that level. But given we could if we wanted to, we could be a bit aggressive there and look to sell on an aggressive trade here, and instead of being long here, we could take our profits off and actually look to get short. And we had a nice decline here. Then as the market rallies back up into that resistance level, certainly this is something we want to watch. And those of you who were privy to this move that we saw, we talked about this being a very big reversal candle in the euro. And sure enough, it led to a massive decline in the euro. This was the start of that decline that we've all been watching in the euro over the last several months. And it all started by just looking at that 1414, the retest of that structure level, and a major reversal candle that we saw there. But my point in talking about all of this is just to show you how powerful structure can be when you know what you're looking for. But the biggest problem that traders run into is they can't do this. They have a lot of trouble. They're like, well, Jason, I get the fact that structure leaves clues, but how do I know? Is this an important level? Is that an important level? How do I know which one of these structure, support, and resistance levels are really the ones that I ought to be paying attention to? Well, in response to this, and a way to make this easier for new traders to identify, we came up with an indicator called DSR, or Dynamic Structure Support and Resistance, DSR. And these DSR levels are really cool because what they really do is they take a chart like this one, where you're trying to figure out, okay, where am I supposed to buy and where am I supposed to sell? And as we bring in these DSR levels, what it allows you to do is it shows you where those key levels are. So you have the initial test that comes in down here, then the market rallies out, and as you come back in, you know, because the DSR level is here, hey, this is a major level that I want to be paying attention to. And clearly the market rallies right out of there. Then as the market retests, you say to yourself, okay, there's a retest. There's clearly an opportunity for some potential gain there. And you can look to short back down into this previous support level. So there are these areas all throughout the market, resistance and support levels, that prove to be very, very nice areas to look for trend and counter trend trading opportunities. And for those of you guys who are new, who don't really have a firm grasp of being able to identify this tool helps your eye identify which areas are key structure levels and which ones are just minor ones that you don't really want to pay attention to. As you can tell here, this one did not come up. This was not a key area we wanted to pay attention to. Likewise, this one wasn't one that we really wanted to pay attention to, even though there is definitely some structure relevance there. So it helps your eye focus in on just the important stuff, and helps you really train that reticular activating system, that little piece in the back of your brain that tells you what to pay attention to train that and hone it in on the areas that are going to be most profitable to you when you're looking for those trend continuation or those counter trend trades. Now, here's the deal. This particular indicator sells for $1,000, and you can buy it any day that you want to from us for $1,000. You can get a discount if you buy another course from us, a 50% discount on that. So we can discount it to about $500. But because it's Thanksgiving, we wanted to do something special for you guys. And so for the balance of this weekend, until about, I think, noon on Monday, my time here in America, we're giving you an 80% discount on this thing. So it's not $1,000. We've discounted it $800 for $197. Now, a bunch of you have already taken advantage of it. There's no limit. I'll do as many of these as you guys as you want. There's no like scarcity. I'm only going to give away 100. I'll give away 1,000 if 1,000 people want it at $197. I really just want to do something special for you guys around the holiday that's going to help get you on the right foot and help you really begin to understand this structure thing. However, we are shutting it down Monday at about noon, I think, is what Darren is doing, because Darren's going to be in the office on Monday. I, of course, am away, but Darren will be there. And so I've included the link under this video, and I'll see if I can't also post it inside of this video when I'm producing the video. But you just simply go here, you click on the thing to get your copy, and you guys can have it. Like I said, it's good for both MetaTrader and NinjaTrader for those of you guys. But those of you guys who are on the YouTube page, who are not subscribers of mine to my email list, I want you to know that it's available to you guys as well. You don't have to sign up for us or anything. You can just go here directly and get it. But this is a powerful tool, guys, that I think will really help you. And if you want more information on the power of structure, go and watch Into the Gray. It's also on the YouTube page. Just go to my YouTube page and check it out. Into the Gray, I spend a lot of time, I think it's about there's almost an hour there, or maybe more than an hour, talking about structure, support, and resistance. It's the foundation of all technical analysis. And everything else that we do builds on support and resistance. all the Fibonacci work, all the harmonic work, all the advanced pattern stuff that we do is all foundationally built around structure. And if you are going to get this down, if you're going to truly learn how to trade structure, how to trade based off of the charts, based off technical analysis, you must learn to read structure. It's not an option. You don't get to say, well, I don't really need to use it. I'll just use some sort of other indicator that I've got out there. No. You must learn to read structure. It is critical. It's a skill set that no one can take away from you. And what you will be able to build from based off that foundation and that understanding of structure will take you light years further than you ever thought possible. But you've got to learn how to do that. This is just a tool. Like I said, it's not going to give you the answers. It's not going to tell you where to buy and sell. It's just simply a tool to help you learn to read structure. But it's a powerful tool. So, if you want it, go get it. If not, do some more study, some more education on the power of structure, on the power of technical analysis. And until next week, be safe and be good, and I'll talk to you soon.